Radio Shouting.
What's happening? What's happening? What's happening? Of course, you know it's your boy B-Hop Radio Shouting. Hey, man, I got my A-Town fam in this thing. Real estate mogul himself, AD the broker. What's going on with it, boss?
What's going on, my brother?
I mean, Adonis, now, this real estate market in Atlanta is off the chain. I was just talking to one of my coworkers the other day. She was about to move down here. She's saying that they're talking about no contingencies. They're talking about no appraisals. They're talking about, we don't care what you got going on. You just buy this house as is. Right. What the hell's going on out here?
Well, right now, we're seeing the carryover effect from last year.
Okay.
So right now, what you're talking about is no contingencies. We're talking about the fact that just to get an offer that's competitive, a lot of people are saying, hey, we'll pay 10 out of our pocket. Over asking and just waive the appraisal fee. And it's like, this is stuff that's like really changing the landscape of the market. So we got to remember the fact that we got to still kind of hold it together when it comes to stuff like inspection and contingencies. Yeah. Do not ever waive something when you get a house and then the roof is falling in.
Exactly, termites all over the damn place. Yeah.
So I tell my new agents and I tell, my first-time home buyers, really be careful on, falling in love with houses to the point to where you're going to get yourself in the bind.
Exactly.
You know what I mean?
So now in this market, though, if you do own a home, you have acquired a massive amount of equity.
Let's break this equity down. I love this word.
So exactly, I'm with that.
So a little bit about equity. Let's break some myths down. So first and foremost, let's use some numbers. Let's say your house got appraised for $300,000. Let's say you've paid it down to where you only owe $200,000. So the equity is the difference between the appraised value and then what you've paid down on the loan, what you own on the loan. So in this case, we got $100,000 in equity. So the first myth breaker is you cannot access the whole entire $100,000. A lot of people think, hey, I got 100 in equity. Let me pull that out and flip it into something. Now, one thing you can do a number of things. One thing is a cash out refinance or home equity line of credit, which is a HELOC. So let me just briefly talk about one.
Yeah.
So if you wanted to, let's say, pull 20K out and just do something, what they do is they say, from the equity, we will give you 75% of what they call loan to value. So what you do is say, okay, of this appraised value, I just got to figure out what's 75% of $300,000. So in this case, it's $225,000. So the difference between that $225,000 and what you owe is what you can pull out and refinance. So that's a cash out refinance. This is one of the biggest things about home ownership that in certain communities we don't take advantage of. Yeah. A lot of times I've seen people take their equity out and put their kids through college or fund businesses or take the money out and go buy commercial property. Yeah. So that's why it's just as important as having life insurance and the home ownership part. It's just it's just essential, man. So that's the brief overview of what equity is and how it kind of works. So now what about the lines of credit, though? How does that work? Well, the lines of credit, the difference is when you do a cash out refinance, you're saying, hey, I'm taking the cash and I'm refinancing. The home equity, the HELOC, the home equity line of credit, is a line of credit you can draw on continuously. Ooh. The only issue is the interest rates move variable with the prime rate. So if you're not disciplined on having like a large sum of lines of credit, it may not be for you because that rate that you got to pay back is dependent on how much you use, basically. So if you got a $40,000 HELOC, and you've used 10,000 of it, your note would be different than when you use 30,000 of it. Okay, so it's variable. I'm living in the West End in Atlanta. I bought that house, and this is just, for an example. I bought that house in 2008 for $75,000. You're a lucky person. That house is now worth $400,000. Yes. Should I sell it? Should I sit on it? Or should I pull out a HELOC? So, all right. These are the things. Great question, first of all. Yeah. these are the things to think about. Atlanta, what we're seeing is a transitional period where we might not ever go back to what everybody's waiting on. We're looking at a baby New York or a baby San Francisco.
Yeah.
We're in the middle of it.
My
and
God.
so the issue is, if you sell, you can sell and run off with that $300K.
Yeah.
But where you gonna go? Where you gonna go?
Yeah.
You see what I'm saying? So it's like the people that got the deals, it's like if you're sitting on a property that you purchased as an investment property, that's different than somebody who maybe have it as a primary residence. Because if it's a primary residence, you know, you kind of like, damn, you know, if I sell it, where can I go? But if it's an investment property, you can do what you say.
Yeah.
And you can maybe do a HELOC, or you can do a cash out refinance, and maybe, you know, take your money out and do another flip or something.
So what about the people that are thinking to themselves right now, they want to pull out some equity and then go into the investing side of real estate? What should they do? Is this a good time to do it? Can you do it? Or are there any deals, or is everybody just in the bottleneck of a situation to where there ain't enough properties on the doggone market?
Well, the one good thing about it is the properties are starting to come back. The inventory is starting to come back on the market.
Okay.
We saw in the last 2 weeks that a lot of my agents did say that, man, we could see the fact that it's still, now let me say this, it's still, every deal is like, if you don't know the person that's damn listing the house, you can damn near hang it up. Okay.
Yeah. Oh my God.
But we are seeing the inventory come back on the market. It's not at the normal rate, but what we're seeing is we're in Atlanta. They've opened everything pretty much back up. So now we don't have that fear of waiting to like what's gonna happen. People are ready to, you know, pull the money out.
Yeah.
So I would say that if you're really, really, really not comfortable with waiting to see what's going on, sometimes you gotta take the money and damn run.
So now answer me this. Right now, what is the best thing for the first time home buyer? New property, new build, or should they be trying to get into an old property?
Yeah.
Because I was thinking to myself, I was like, if you go out there and try to buy another house, you buy an old property, but then, you know, you don't know if that property done been through hell and back. You could go get the new property, but you don't know if it's going to be what. It seems to me like new properties might be a little bit easier to get because the price will be more so as is, and then you ain't got to worry about, you know, the stuff being crazy. But what do you think?
The only downside to new construction is, and you're spot on with that. New construction is going to take you 6 to 8 months a lot of times to get in, which isn't a bad thing. But builders are only building once you purchase the lot. Once you sign on to purchase the lot, they're not building houses and then saying, hey, we got these houses ready to go because of what happened last time in 08 in that time frame. So the issue is when we have issues like lumber shortages and stuff like that, it directly impacts the buyers that are ready to buy. So you're kind of at the mercy of when they open up these allotments. So if I'm a builder, I can only get approved 3 to 5 homes to be, you know, built in a city at one point in time. So if you're not in that, you know, 3 to 5 allotment, you might have to wait 3 or 4 months before they can do the next allotment.
Oh my God!
So that's the downside to the new construction game. But the beauty is they're building everywhere. Literally everywhere. So. I mean, it's
but then answer me this though too, because I'm seeing a lot of stuff being built, but I'm not seeing them old school nice houses being built. What's going on with that?
Yeah, and I'm not the biggest fans of the way they build a newer home. Yeah, because it seems like hell, a good windstorm, a baby tornado,
hailstorm, your house on the doggone driveway,
Ivan again or something. You know? But. So that's the issue, is they don't build them to last. So a lot of the homes like in the 60s, like where we grew up in the West End, and a lot of those four-sided brick and all that, they still standing. Yeah. You know, so that's what people mean when they say a house has good bones. It's like the infrastructure is strong. You don't have foundational issues. You don't have siding issues that you got to keep up and maintain.
Four-side brick.
You see what I'm saying? At least if you get 3-side, you know.
Exactly.
So you correct with that,
So now, from the business side of things, last time we talked, you know, you was cranking up the brokerage, you were sending people to school and stuff like that. What's going on?
Man, I messed around and put my money where my mouth was, and you know, they called my bluff, man. I got one of my students is already finished with the damn class already. She called me. Shout out to Nina. Shout out to Stefan. Shout out to Rachel. Yeah. Those are the 3 people that did earn the scholarship. Yeah. And I mean, they are ready to just go. So now I'm actually about to move into a bigger space, man, because I just expanded way faster than I was expecting, which is a good thing.
Ain't nothing wrong with that.
Yeah, it's nothing wrong with that. But the scholarship was real. We will be highlighting everything from their schooling to their first closings and beyond, you know, on Instagram and Facebook and YouTube. So really be on the lookout, Okanya and Associates or at Adonis the Broker with that stuff. But man, it's just a blessing, man. It's a blessing, the expansion, man. Expanding in the pandemic, man, I just can't really tell you how powerful it is just to really kind of walk through a moment in destiny, I feel, for me.
So now, when we speak about business, you got stuff like PPP, EIDL going on, and then just the whole business mind. Like you say, the millionaires are made in COVID and situations like that. You know, the Great Depression and stuff like that, the 2008 crash as well, that is what causes a lot of people to get rich because they ain't scared. So talk to me about maneuvering and having a business mind during these kinds of times.
So, all right, let me talk to all of my corporate America workers, okay? You're looking at one.
Now, over here, we have corporate thugs, okay? People that tune into this are corporate thugs. Continue.
So, we've all been where you are. The whole point, whether you got a 9 to 5 or not, you need to have an LLC, period, okay? I don't care what it's for. You know, you need to have an LLC. You need that additional stream of income. The reason is, for example, the EIDL, Economic Injury Disaster Loan. When it first hit in 2020, if you had an LLC or corporation just on paper, whether you were making money or not, you were afforded now, of course, you had to show certain things now, so we're not going to just say something for nothing, but you were afforded a chance to get a loan, and we're talking about sub-3, you know, interest rates to pay it back. If you could show 6 months of economic injury, you were getting up to $150K. Like real money, real, just for it being incorporated.
Exactly.
You see what I'm saying? So it's like, a lot of times we really have to remember that these jobs and stuff are a means for us to just be good employees. You know, while you're in that space, you know, continue to use your mind and think of ways that you could really set yourself up to really live beyond an oppressive damn structure. Let's be for real, okay? An oppressive damn structure. But recently, they just upgraded the limits, the lending limits. So it went from, if you could show 6 months, it went to, if you could show up to 24 months of injury, they give you $500K.
Ooh.
And I'm talking about real money. And I'm talking about, so let's say if you got 20K, they were talking about like paying back $30 a month for 30 years.
Those are facts.
What are we talking about? So even if you maybe had a little drop for a quarter, if you use the PPP, you can say, hey, you know, in 2019, you know, I had sales that for the first quarter that were $40K, and I went down to $38.7. It was a loss.
Yeah.
So guess what? You can apply.
Yeah.
You see what I'm saying? So if you had a loss in a quarter, if you had a loss for the year, they were really lenient on who could get and receive these loans. And some of that stuff on the PPP side is forgivable. Now, they weren't giving as much on the PPP side, but the EIDL, I mean, they were giving out some real money.
What about my people that understood that and went straight to the Gucci store? What do we say to those folks?
I hope that you wrote it. I hope that was a business expense.
You doing a photo shoot or something, fam? My God, because they've been coming around locking folks up behind that too.
Yeah. You can't play. So the thing about it is, everything that we talk about through a lens of legitimacy.
Yeah.
We don't listen. I ain't running from the tax person. I don't play that game. Okay?
Exactly.
But the thing about it is, even the tax laws are set up for corporations to win.
Yeah.
The thing about it is, whether you like the last president or not, if you set your business up in line with the tax laws and the stuff for corporations, you won.
Yeah.
You see what I'm saying? So that's why I'm telling people, even if you have a job, even if it's selling water, doing T-shirts, whatever it is, you need to be incorporated.
Facts.
So that's why we are doing this stuff, so we can share resources and we can share success stories. A lot of us have made a lot of money, and we could really take our ball and go home.
Yeah.
We could really leave the country. You know, I talked about getting the hell out of here, okay? Now, come on. Now, I thought about it, but the Most High is like, no, I didn't give you a certain amount of money, charisma, and all this stuff.
And flavor.
and sauce. To damn take your ball and go home.
Yeah.
So we are doing this literally to serve the community, as you say, to push the culture forward. So I just want to empower people to say, hey, it's people that look like us. We are just common people from the west side of Atlanta.
Facts.
Like, bruh, I'm telling y'all stuff that I've done.
Yeah.
I'm telling people stuff that I did wrong.
Yeah.
So you don't have to jump over these hurdles.
Well, answer me this, though, AD. What is it for people to be able to get over that fear of leaving corporate America and standing on their own and, really going out there and chasing those dreams? Because I think, the security of that 1st and 15th check or that 10th and 25th check is enough to keep people stagnant when it comes to, really going out there and trying to make stuff happen for themselves.
And see, at minimum, I'm saying, even if you don't feel like entrepreneurship is for you full time, at minimum, have it as a multiple stream. You see what I'm saying?
Multiple streams.
Because,
My God.
You see what I'm saying? Because the thing is, when you're in these places, it don't matter if you're the manager or if you're the grunt worker. Everybody's expendable.
Facts.
I've had people come to me, man, it's like, damn, I was the damn linchpin in the damn company. But did it matter what I did? How much money I made them?
Come on.
So my point is, even if you have a cushy job, that's even better for you to see what it's going to take is that sweat equity, man.
Yeah.
So we talked about real equity.
Yeah.
But we talking about after you get off of work, are you crazy enough to spend 2 and 3 hours?
Yeah.
Do you know the first 3 or 4 years that I was booming as a realtor, my clients didn't even know I had a job.
My God.
That's how hard I was grinding.
Yeah.
They thought I was full. No, I was still clocking it. I was still clocking it, but I was busting my ass. You see what I'm saying? So you can't tell me, hey, I can't. No, I want to hear it.
No.
You see what I'm saying? So my thing is, entrepreneurship is not for everybody. But the thing about it is, the way to get over that fear and apprehension is to, while you have it made in a corporate setting, that's the time to really get stuff in order.
Yeah.
You see what I'm saying? So if the pandemic didn't really kind of get you going on a frequency of thinking beyond this.
See, I think what happened with that pandemic, what happens is people get scared to death.
Yeah.
And they're not scared to life. You see what I'm saying?
Come on now.
And I know in my case, when that pandemic hit, it was like, okay, it's time to get busy out here in these streets. I mean, it was one of those things to where, what do you got to lose when you're betting on yourself? If you don't bet on yourself, then who the hell can you bet on? And
I think what it really is we all were raised on a survival mode. We were raised on surviving. That's why you see this competition in our community.
Yeah.
Because it's like, no, you were taught you better get it or somebody else gonna beat you to it.
Yeah.
But it's like how I've kind of powered up in my own personal life and professional life is I had to switch that from a survival mode to a mode to thrive and not survive.
Exactly.
So I had to shed a lot of that competition and I gotta beat everybody. I gotta go. It's like, no.
Yeah.
Like, you have to open yourself up to networking and to, sharing your platforms and, really, being honest when you need help, delegating. I'm not, guess what? The days of being a one-man Taliban is over.
Yeah, that's
it's
true.
over. I'm not doing
true.
it.
Yeah.
You see what I'm saying? So it's like, I know that I'm as strong as my team.
Yeah.
That's why I opened up stuff like the scholarship, because I knew if I continued to serve and serve a purpose and serve the community, then I was gonna win. My clientele was first time home buyers.
Yeah.
That's how I was able to open up a brokerage, by helping my peers, not people that were below, no, people that I rock with.
Exactly.
You see what I'm saying? So I think, that's the biggest thing, is shedding that survival mode. But I understand it because it was real.
Exactly.
It was real. It
Come
was
on,
real.
man.
I mean, we couldn't do this.
Exactly.
People lost parents and family members and all that. So, and I just want to tell people, I lost my mom at the beginning of this, at the sheer beginning.
Sure enough.
And just to be here, sitting right here, is crazy. It's just crazy.
Yeah.
So I understand. So, like I say, the stuff I talk about is stuff that I literally have either been through or going through, currently.
Exactly. Now, lastly, if people want to get down with Akanya Associates, they want to buy a house, they want to list a house, or they just want to come in and be an agent, how do they get down with Akanya and Associates?
So you can reach me personally at Adonis the Broker on Instagram and YouTube. And we do have a company page on Instagram as well, and Facebook at Okanya and Associates, OKONYA and Associates. And you can also reach us at www.okanyandassociates.com. And like I say, we're going to be doing a lot of stuff on YouTube, I don't want to let the cat out the bag, but just more than real estate, I really want to touch more so on the financial literacy part and just the ownership as well, because I see as a community that a lot of times we don't look at that kind of stuff until it's time to make big purchases, houses and cars, and we're really kind of not using our full purchasing power, to really be able to do this generational wealth thing. So that's what I'm about, is really educating and really building a community around that.
Answer me this though, AD. How are people gonna make money in this market when it ain't no market?
Well, the thing about it is they've kept the interest rates crazy low.
Okay.
Crazy low. So I'll give you an example. For me, I bought my first house 07, right before the damn pandemic. But 07, what's
the
that?
housing crash.
Housing crash. So that's what, 14 years ago. The beautiful thing about that is, okay, a property like that I still own to this day.
Yeah.
I get paid rental income from that.
Yeah.
So from that, my current house that we live in, we don't have a mortgage because that's paying it.
Exactly.
So now, since we've, bought the house, now we're looking at the equity thing we're thinking about. So somebody like me, or let's say somebody in my boat who is like, man, I got money, I got equity, or I got these lines of credit. The things that I would say do is two things. In the Atlanta market, it's tough to really crack the code as far as entering the market on the investment side right now. So you might have to go to secondary markets, might have to leave the state. And it's not easy to own property, your first investment property, that you can't really just pull up on.
Yeah.
You see what I'm saying? So you got to go online with this.
Yeah.
You got to go online. This content is king.
Yeah.
So a lot of times I've seen like my younger mentees, it's like we can mentor them in certain aspects, but man, online, they're head and shoulders above. Bro, when I'm talking about crypto, when I'm talking about that Forex, when we talking about, that's what I'm talking about. And the thing about it is, I'm seeing a big push in certain marginalized communities being able to have access to this money. See, they told us that the stock game was too hard to comprehend, but it wasn't.
Come on.
But now this cryptocurrency, the odds are even.
Yeah.
You see what I'm saying? The odds are even. What, yeah. Rocco? You see what I'm saying? We just trying to make the odds even. So that's why we are talking about, we got to make the odds even. So that online.
Okay.
That's the thing. So we can talk about it in depth next time.
Yeah.
We can, because that's a whole nother diversification. Okay. So we done talk. So we've talked about real estate. Now, I listen. When you make the money from corporate, you can go into your own thing, but then you got to start making that money easier. So that's what we're talking about. The young people understand my time is too valuable to just do 9 to 5. So they already hitting the ground running. So I got to salute all y'all out there.
Exactly, because they definitely getting over with that. Beehive Radio, Shawty, Adonis the broker. We'll be back with y'all talking about some more money later on. Holla at you before we go.